Hey everyone, welcome back. Hope you guys are having a great Wednesday. So the markets were actually kind of mixed today. Bitcoin was actually up a little bit today. Miners were down for the most part, except for some miners that maybe people are bottom fishing a little bit. And then we'll also take a look at Soluna and BitDigital joining forces a little bit for hosting. Then we also have to talk about Iris Energy with the interview that they did with Bryce McNallie from McNallie Money. So we'll talk about that. And I have some thoughts on that one, especially around the HODL position. Then we'll also take a look at Marathon's decision to basically, do an ATM of 750 million, right? So we'll take a look at what that means. We'll look at some numbers and what they could do otherwise, all right? But as always, you guys know the drill here. Not financial advice, for entertainment only. Please do your own research. I'm invested in following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. Definitely helps me out tremendously. So let's get into it here. Let's get into the first one, which is going to be on Soluna here. So Soluna and BitDigital announced today a 12-month, 4.4 megawatt hosting contract with BitDigital at Soluna's project Sophie in Kentucky. The contract will fill capacity at the data center that is becoming available as the current customer's contract begins to roll off in November 2023. So they're saying that, BitDigital is going to provide some miners going into that facility, about 4.4 megawatts. I'd have to run the numbers on that as far as what that could entail, how many miners that would be. They didn't provide any really specifics on it. BitDigital also provided a press release on this as well. No real details on it other than the 4.4 megawatts, so we really don't know what's going on there. But we do know that it is happening there. So relatively quick and easy. Next, this one's going to be a little bit more tricky here, so I'm going to try to explain this as best as I can. So in an interview yesterday that Bryce McNallie did with Daniel Roberts, co-founder and co-CEO of Iris Energy Limited, one of the questions that he posed to him was HODL, right? Will they HODL going into the bull run here? Daniel Roberts' response in a nutshell was, they're a miner. They consider themselves kind of like a gold miner, where a gold miner sells all the time. They don't HODL anything. And I think I don't know how to phrase this properly, but I think that's kind of a wrong way to look at it, right? There is a difference between Bitcoin miners and gold miners, you could say. Typically, the biggest difference here is, especially as Bitcoin goes into the bull run here after the halving event, Bitcoin goes up, 3, 5, 10x, whatever it might be. Gold, at least the last 10, 12 years, has been pretty much flat, right? So you basically do need to sell to fund your operations and things like that. Whereas Bitcoin here, you do have a potential to go pretty nicely on an upside here. If Bitcoin goes to 150,000, maybe is close to 200,000, something like that. We're going to look at the numbers here of what that would actually mean here, right? We also know that Iris Energy is looking to grow to about 6 exahash or some 600 million they want to use to grow to about 30 exahash. That's their plan here. And could they offset that by hodling a little bit here going forward as we get closer to the halving event and into the halving event and into the bull run and things like that? We're going to run some assumptions here on Bitcoin price going up, network hash rate going up, what they could actually mine, their own hash rate growth here in the next, basically, what are we at, about 16 to around 20 months or so. On it, so I'm going to explain it to you guys as best as I can. If you guys have any questions, hit me up down in the comments below. But let's get into it here. So here's Iris Energy's spreadsheet here. I'm using basically the data that we have from September numbers for them. And if we scroll down here, I created another spreadsheet in here just to kind of run the numbers on it, see if I can make sense out of all of this. So right now they are at approximately 5.6 exahash as it is. They might have grown a little bit here recently, but they've been stuck at 5.6 here ever since, looks like June here. Okay. Now, I'm giving them the benefit of a doubt of growing by about, I think, what did I put in here? We'll take a look at it here. But here's a spreadsheet that I created just today, just to run some numbers and see if we can make some sense out of all of this, if it makes sense. And is there a benefit to actually hodling against selling monthly, right? Or selling daily, depending on how they sell it. But here's what we have. So we're looking at the dates here, basically, of October, starting in October this year and going all the way through June of 2025. Their exahash growth, they're at 5.6 right now. I have them growing at about 7% per month on average, right? That would get us to about 21 exahash by the end of that time frame. Now, I did not include the cost to grow to that part of it here in the numbers here, but this is based on them diluting here, I guess you could say, to get to these numbers as well. Okay. Network hash rate, so 400 exahash is kind of where we are right now, more or less. And that's going to be growing by about 2% a month here going forward. So by the time in June of next year or 2025, we'll be at 594 exahash. We might be higher than that, we might be lower. Don't know exactly where that's going to go. Daily rewards, obviously, is what the miners get currently. We're at 900. After the halving event, we're at 450. Their estimated BTC rewards are based on their exahash that they have now, the BTC daily rewards, network hash rate. All of that is being considered into this as well. And then this is what we're getting. So for October, we're looking like maybe around 377 because the network hash rate has increased, right? It's an increase from it's a decrease from what they had in September, which was like 390 something, I believe. Let me see here. If we look at the numbers, yeah, 390 is what they had. So it is a decrease because the network hash rate has increased, okay? And then that gets us, you can see all the estimated Bitcoin rewards that they have here. And then once we get into the halving event here, which is in May, right around April, and then May is going to be a full month where you get cut in half. They end up in April by about 502 Bitcoins possibly if they reach 8.4 exahash roughly. And then May, that gets cut in half. So they would be at 263 Bitcoins for the month possibly. And this is based on 30-day averages for each month here. So I'm not going by the actual number of days in each month. I'm just going by 30 days. And so it could be lower or less than that. And we can see here that as they get closer to 21 exahash, the network hash rate has obviously increased as well. They're still more or less increasing their Bitcoin rewards for each month based on the growth here, right? So if we have that growth, this is the way things are going to work out. Electricity is calculated based on their Q2 numbers, or their actually H2 numbers. So I divided that by 6 months. That's kind of the estimated number here of 3.6 million on average. And then as their hash rate grows, so does their electrical cost grows as well. Their operations, I have them at 2.06 million per month. That's based on the 6 months average here that they provided for H2 or H1 actually. Right? No, it would be H2 for them. That gets us the numbers here. So if those things stay the same, this is how things would work out. I'm not including any share-based compensation, any other things that are non-cash based. So these are all cash-based expenses here. Total cost would be 5.6 million to start out at, and then at the end would be about 11.6 million. BTC price, we're also going from 32,000 here, roughly the estimate in October, or the average, to approximately 196,000 by June of 2025 sometime. So we're increasing that each month by about, what are we increasing that by? About 9.5% on average over the next 21 months, basically, okay? The revenue here is what they would be possibly, generating based on the average Bitcoin price of each month, estimated number of rewards that they would get for each month. That's the revenue in this column here. Net cash profit. So we're taking the total revenue, subtracting the total cost. That's what they might have left over to possibly put into HODL position, right? And then this is the BTC equivalent of what they could HODL possibly, 200 BTC here to start out at. At the end, it would be around 431. And at the end of it all, we have here what they could possibly have in revenue side of things. Now, let me see, net cash profit after, let's take a look at what that would be without net, just revenue, just straight revenue would be 771 million. After expenses for electricity, operations, things like that, it would be 599 million over those 21 months. And then if we look at what they could HODL here, at the end of those 21 months, at the end of those 21 months, if they HODLed it all, which I wouldn't recommend to them HODLing, I would say start selling closer to, once we start getting into above 100,000, probably start selling a portion of it as you go up and then also as you go down, because you really don't know where the top is going to be at unless you can time it perfectly. Well, if you timed it perfectly and sold at the top, you would have approximately 5,957 Bitcoins on HODL. That would be valued at approximately $1.17 billion right there. So if they wanted to grow the 600 million that they're going to need to grow to get to 30 exahash roughly, this could definitely pay for it here. They could also pay for it here as well with just the revenue or the actual net cash profit that they could have possibly from this. Meaning they may not have to dilute as much as as people might think is one way to look at it. But also if they HODL that, you're increasing your numbers by, what is that, about 500, almost $600 million by doing the HODL if you timed it perfectly. If you didn't time it perfectly, we're probably looking closer to 300 million, 400 million, something like that. If you dollar cost average out as the bull market is going, and then obviously as we're falling from there going forward. But we don't know if we're going to fall from there. So it's a double-edged sword with Bitcoin because we don't know where the top is going to be and if we're going to fall after that, especially as we get more institution involvement here and spot Bitcoin ETFs, things like that, whatever might happen in the next basically almost 2 years here going forward. But that's why I say that not taking a look at HODL of what the impact could be, I think is a mistake partially. And you might be leaving money on the table here, especially with Bitcoin. Right? Bitcoin, we know, is going to be appreciating in value. You got the halving event, it's going to cut supply. You got the spot Bitcoin ETF coming in. There's a lot of things pointing to the upward trends of Bitcoin going into the future, at least in the next year to 2 years going forward. So that's why I say I'm not a big fan of them not considering doing a HODL and just straight selling everything. Because like I said, I think they are leaving some money on the table here that they could potentially increase in value, obviously, going forward. So let me know what you guys think of this. This is just some, obviously, back of the napkin numbers here for this. This is a lot of hypothesis here with a lot of assumptions as well, with Bitcoin going to a certain price, network hash rate going to a certain price, them growing to a certain point as well, all of these things. But this is kind of the way I would look at things and say, maybe HODL does make sense here, right? Especially as you go into the bull run. But let me know what you guys think on this one, okay? Now we're going to look at also Marathon in the same way here as we did with Iris Energy here a little bit. So if we look at Marathon yesterday, well, first we'll do this. Marathon Digital Holdings schedules conference call for third quarter. They're going to do that on November 8th at 4:30 p.m. Conference call. Let's see here. I don't know if they're going to provide the numbers at that point or if they're going to do those in the morning. Probably at the end of the close of the day, they're going to do that. Okay. So that's coming up. And then obviously yesterday they filed with the SEC for Form S3. That's basically their ATM for $750 million here. And you can see it here. A sales agreement prospectus covering the offering, issuance, and sale by us of up to a maximum aggregate offering price of up to $750 million of our common stock that may be issued and sold from time to time under the ATM program with H.C. Wainwright and Company, LLC, and sales agent. Okay. So they're also looking to grow, dilute in the process, but they really don't. We'll look at the numbers, but I really don't think they need to dilute. I think they could do it all with everything that they have here, especially when we go into the bull run and how that's going to affect the value of their Bitcoin here going forward. So here's Marathon right now. Shares outstanding 205 million. Stock price is $9.47. Go down here as well. We'll take a look at some of the numbers, and we're using the numbers that we do have here for them right now. And it's the same thing based on what we saw with Iris Energy, right? So you got the current exahash, that's growing by approximately 2% a month here, getting them to about 30 exahash, 28 roughly by the end of those 2 years. They said that they're going to be growing to 30 exahash here anyways. They might grow beyond that. We just don't know. Nothing's really concrete yet. Their numbers here, estimated rewards, their network hash rate, obviously, electricity. Okay. So this is electricity, what they're paying for monthly here based on the September numbers that we do have for them. And that's basically the numbers they provided, dividing it by 3. We're getting the monthly cost to mine electricity to mine Bitcoin. And then that obviously increases as their hash rate increases as well. Okay. And let me see here. Right, if their hash rate goes from, make sure I did that right. Think I have this like increasing by 0.5. And I have their, okay, so we got to change this up a little bit. So that should be considering growing at the same rate as their hash rate is growing. So it's a good thing we checked because I thought it was a little high. So about 27 million at the end. That makes more sense. All right. Operation side of things, this is how much it costs them to fund operations, which is general and administrative costs, whatever else you put into that. That's 6.6 million roughly a month. Total cost, 25 million a month to operate all that stuff. Let me zoom this in for you guys as well, so you guys can possibly see this a little bit better. Maybe we can go a little bit more, 200%. There we go. Okay, so there's the numbers for that. Total cost, BTC price, same thing with Iris Energy. We're getting to roughly 196,000 at the end of those 21 months. Revenue here, you can see revenue going up until we get to April, which might be their high here at 71 million for revenue, and then obviously half of that happening in after that, after we have the halving event. Okay, net cash profit, this is how much they could have profit based on this going into the halving event if Bitcoin goes to where we're analyzing here. And then what they could have left over after paying everything, this is what the Bitcoin they could HODL in addition to what they already have, right, which is like 13,000 something. So based on those numbers, you can see here that they could be at approximately 23,228 Bitcoins in HODL. That's with the addition, with the 13,000 that they do have already. And at that point, if Bitcoin was at 186,000, that would be valued at $4.5 billion. Right? They're looking for 750 million. Why don't they just use part of their HODL here to grow out of that, to use that HODL that they do have and still add to it, right? Sell 50%, 60% of the HODL or whatever each month, what they mine, put the rest into HODL, and then whatever they need to use to grow, pull it out of that as well. And you don't really need to dilute that way because we do know that Bitcoin's going to eventually come back down. At least historically it has. So I just don't know why. I think it's basically giving them an option to do it. So hopefully they don't pull too much on that dilution and they use more of what they actually mine and generate to fund the growth that they want to grow forward, especially as we get in the bull run, right? But this is a great time to use the Bitcoin that you do have to sell a portion of it, to fund your growth, going into the bear market again, to prepare for the next setting event. At least that's the way I would do it. And we've seen other companies do that as well. We've seen it with CleanSpark do that, where they were selling towards the upper ends of Bitcoin at the last bull run at 69,000. Going down, they were selling it and they were using it to grow. And they've grown, we've seen they've grown tremendously here. They've also done dilution as well. But I think they learned even more from this process. And maybe they'll dilute less going forward. But this is just me, as average Joe, looking at the numbers here and looking at what might make sense. Now, this is based on everything working out the way it does. Might be up and down. We're not going to be exactly on these numbers here, but somewhere around there, I would think would make sense, right? You have 4.5 billion, almost 4.6 billion in assets that are just sitting there. Why not deploy? Be basically, what is it going to be? Not even, what is it going to be? A quarter, something like that, 20% or something like that of that would go to fund the next operations side of things to grow into the next setting event in 2028. All right. So that's it. That's all I wanted to share with you guys. Just my 2 cents on this. Let me know if you guys agree with this or disagree. If you guys are in favor of total HODL dilution, or if you're in favor of a mix, whether you're selling some and also HODLing some and then selling some of it. Let me know what you guys think of this, okay? Just kind of trying to run the numbers on this a little bit here. But that's it. We'll see what happens tomorrow. Tomorrow's Thursday. And then, we're going to also take a look at Bitcoin, see what's going on with that one here really quick. So if we look at Bitcoin here right now, Bitcoin is actually having a nice kind of slow upward trend here recently. We've been up this week we've been up. Today, we're up now in the new hours again. So this is basically Thursday hours. So we were up Wednesday, Tuesday, Monday, Sunday. We've been up for quite a few days here. It looks like 1, 2, 3, 4, 5, 6, 7. And now we're heading to the 8th day of being up. Miners, however, today, for some reason, didn't do that well. We only had a couple miners that did pretty good here. We had Mawson being up 11%, DMG being up a little bit, 3.5%. Then we had Cypher being up 12%, Argo up 5.8%, BitDeer up 20%. Right, so we're seeing some of these guys that have been beaten down quite a bit here, and might be some bottom fishing here on the investor side of things, looking for ones that have been really beaten down recently and hoping for a rally basically in those mining companies there. That's the only way I can look at it, because looking at this, I see Riot, Marathon down, CleanSpark down, Bitfarms down, also have Wolf down, Iris Energy was also down, I believe. Yep. So all of these top miners here were down well. So the bottom miners were actually up today. So that's kind of what I thought was maybe happening. Let me know if you guys agree with this too or not. All right. So that's it. Hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. And then also the Patreon members will get the spreadsheet updated with those spreadsheets in there. And you guys can run some estimates, some calculations on it if you like. And then we'll see what happens tomorrow. So I hope you guys have a great Wednesday evening and a great Thursday. See you tomorrow.